Hello and welcome to BQ Prime. A very good afternoon to all the viewers. I am Hiral Tatia. Joining us on the show today is Rahul Sharma from JM Financial to discuss in terms of what's in store for the markets from here on. Is somewhere above 20,000 on the cards in terms of Nifty 50 or not? Because that's a level that everyone has been eyeing. Rahul, good afternoon and welcome to the show.
Very good afternoon, Neil. Thanks for having me.
Always a pleasure to speak to you. Rahul, my first question coming to you is overall, we've just started the September series now. What is that setup actually indicating to you from here on in the month of September?
Yeah, so a couple of developments. One is, we had like 5 to 6 weeks of pain in the month of August, and post that, what has happened is, especially since the expiry day, the institutional participation has turned from bearish to bullish. So FIs have actually cut their shorts in index futures and have turned net positive. Secondly, broader market has not been giving up in any way, in spite of the Nifty correcting some 750 odd points from the top. What's noteworthy is the new leadership that is emerging, especially from IT index has been doing well in the last one odd month. Like we've initiated IT baskets which are up like 7% as of today in less than a month. Then you have leadership coming in from metals which are at life high. Then you have the chemicals which are coming out of almost 12 months of correction consolidation. So new leadership is emerging. And secondly, the pain points of August in terms of index components were Reliance and HDFC Bank. Now these two, big daddies, if I may call them, seems like selling is over in them, and now they should be looking for a bounce back at least. So even if we have like a 5 to 6% kind of a bounce back, that should put Nifty back to 20,000 mark. But the rest of the market, which is like the banking and financial space, which has been under pressure since like even before the Nifty started peaking out, this index was peaking out. On the silver lining is the PSU banks are holding on pretty well. So we feel that the next round of leadership, especially from the banking part, could come in from the PSU banks. Private banks may see a bit of bounce back, but it is, at least the downside seems limited on this index. And once we cross the 45,000 mark,
Right.
years. So we have like 70% of the market which looks pretty solid, which means that 1,000 point rally on the Nifty is a very high possibility in the month of September. And especially given after the backdrop of around 5 weeks of consolidation correction that we've had in the Nifty. So, a pretty bullish setup, especially at the beginning of the September series. And we feel that there is a good upside to be had in the rest of this month.
Right. So are you seeing this fueled by mainly FIs or even retails? Because the FIs, as you mentioned, have covered their shorts completely in index futures along with the August expiry, and they've started adding longs as well. Is that the trend you're witnessing with the retail investors as well?
Yeah, so pardon me for saying this, but retail doesn't make money in derivatives. We have the Savior report for that. It's primarily the FIs which are dictating the direction and sort of the positioning in the market. In the last 3 years, probably it was only 2 or 3 times where retail has gotten it right against the FIs, but generally it is the FIs which get it right most of the time. So on the cash segment, I think the selling was not really a major concern. In fact, last week, every single day, we've seen institutions buying into the cash segment. And what has happened is in the last two or trading sessions, FIs which were holding around 30,000 short contracts in index futures are now positive 3,000 odd contracts as of Friday's closing. Now, the more time we spent about the 20-day moving average, which is 19,403 as of Friday's closing, we feel that there could be incremental longs being added by FIs on the upside. And what I see is once we cross, for this week, 19,600 seems like a very high possibility. Once we cross 19,600, I think the next stops will be directly at 20,000, and above that 20,400. So these are the two hurdles that we have to keep in mind, playing into the month of September. As far as supports are concerned, I think 19,230 was the final below which Nifty failed to sustain. So that acts as a base going into the September series. So one can have a stop loss placed at 19,230 on the closing basis. And as far as the current setup is concerned, it's not a buy on dip market. It's a market where we have to add more on confirmation of resistance breakouts. So look to add as the market scales up, because we have to not forget that this is still a bull market, and the more thrust is generated on the upside, the more upside it should generate in terms of points for the Nifty. So good possibility, good probability that we head towards the 20,400 mark, which is like a 1,000 point rally, incremental rally from where we closed on Friday.
Right. So if you're talking of a 1,000 point rally from here on, and as you categorically mentioned, it has to be the large caps, which have to take us there, right? The kind of upside that we've seen in the mid caps as well as the small caps, the momentum has been relentless. FI's participation has been very strong as well. Fundamentally, if you look at it, yes, valuations at current levels do look stretched for mid caps and small caps. But what are momentum indicators indicating to you? Do you think now the mid caps and the small caps are in the overbought zone, and that's what is going to let that shift in terms of money to happen to the large caps?
Yeah, so in the last 3 odd months, every participant has made money in mid and small caps. If general analysis and hygiene was maintained, money making has been easy. And generally, when such kind of optimism fuels in, it is advisable to be not greedy and be fearful. We don't see like a major top, but definitely a pullback from here could mean that 20% correction, especially in individual counters, can be a very high possibility. So the best thing to do is to take money off the table, to book profits in mid and small caps, where like the indices have gone up like 40-50% in the last few months. It is advisable to take money off the table. Probably after a correction, can look to re-enter, and that money can be switched over to large caps, where relatively the positioning is even better, the risk rewards are much healthier, and we feel that there is a good 10 to 15% upside that can be had in the large cap space. So from the PAC pack, Gale is something that we like in particular. I think in the next 3 odd months, this stock could very well be headed for 150 on the upside, which is like 25% upside. Federal Bank saw very good rollovers happening into this month. It has come out of 9 months of consolidation. I think this is another stock which can give a 20% return in this month. So be selective. I think large caps is the way to go, and we feel that it's best to have profit in the bank rather than have profit in the books when it comes to mid and small caps.
Right. And overall, what should the overall strategy be? Because now, if you're expecting an incremental uptick of almost 1,000 points, we were all looking at a strategy of buy on dips, right? Does that strategy actually change from here on? Because we're just looking at an upside.
Yeah, so frankly, buy on dips was for the previous month we had this clear house view that this is August was a month which was a buy on dip. We would have loved to see the Nifty at 19,000, where the risk reward would have been ideal. But these things don't happen in markets. Ideal things never happen. The best thing is to adapt to the data that is changing, and take due decisions. Now, my sense is in this month, the strategy should be the reverse, which is to add more once we see breakouts taking place. So we've seen 5 weeks of correction consolidation. Now is the time for the markets to change gears. The first milestone is at 19,600. The previous one was at 19,400, which was a 20-day moving average. The another one is at 19,600. Once we cross that, it is advisable to add on to long positions. And the final one happens once we navigate 20,000 decisively. So the strategy, is to be, add more positions, pyramid your way up as markets give more and more confirmation on the upside.
Right. You mentioned about 2 breakouts, 19,600, which is the next one, and then 20,000 and upwards. Now, for these kind of breakouts, which are the sectors which you are favoring now, taking into consideration this upside?
Yeah, so IT remains our preferred pick. In fact, we had clearly categorically mentioned that book banks, and this was like when August had begun, September the previous month had closed. So we had suggested to book profits in banks and move to IT. The IT continues to remain juicy. We feel that there is more upside to be had in this space. Then you have PSE space, which is public sector enterprises. We feel two stocks from there which can do very well. One is Gas Authority of India, which I just spoke. Then another one is ONGC, which can give like a 20-25% return from these levels. That also looks good for 225, maybe even 250 on the upside. So ONGC is another one that looks good. Then you have metals which have been doing well, which have held on to their ground in spite of the volatility, in spite of what has happened in China, in spite of all the updates. It has slowly chugged along to a new life high today. So I think this space should continue to do well. From that space, we've been bullish on Tata Steel and Hindalco, although the risk reward isn't exactly favorable for fresh longs over here. But if there are dips, if there are corrections, look to buy onto them. And lastly, the fourth sector which looks good to me is the chemical space. So chemicals have come out of 12 months of correction. Some of them were in extreme pain, especially the specialty chemicals. And now I think, especially given the healthy rollovers that this space has witnessed and the kind of turnaround, kind of a relief rally that we are expecting in this space, could easily mean that around 15 to 20% upside for this basket. So chemicals as a space looks good to us. A basket approach is advisable because it's a very vast space comprising of, you have agrochemicals, you have specialty chemicals, and in between you have the generalized chemicals. So it's advisable to create a basket of them and then, participate in this possible rally. And these are the four areas of the market where we feel there is a good upside to be had. And apart from that, the index heavyweights, we feel that the selling seems to be over. So at least that should bring in a sigh of relief, especially from an index positioning perspective.
Right. So overall, my last question coming to you is from the large cap stocks. We've spoken about sectors. Now, for this 1,000-point rally to happen, contribution from at least your top 5 to 6 contributors to Nifty 50 is going to be absolutely crucial for those stocks to move. So you have the likes of an HDFC Bank, Reliance Industries, ICICI Bank, Infosys. I mean, these four are the top contributors as well. What's the kind of move you're expecting to see in these four names categorically?
Yeah, so I'll just break it down a bit. On the BFSI space, we feel PSU banks should do well. So you have the likes of SBI, you have the likes of Bank of Baroda, Canara Bank doing well. On the private banking space, HDFC banks looks ripe for a bounce back. Bounce back of around 5% is very much possible. So from there, you have some impetus coming in. And then on the IT space, TCS and Infosys could surprise on the upside. So we feel that although the entire space is expected to do well, but TCS and Infosys sort of have a catch-up rally to play. So around 10% upside can be seen in TCS Infosys, which is like 10% of the Nifty weightage. IT is like the 10% of the Nifty weightage, which does well. And then you have the energy space, which is where you have ONGC, you have GAIL, you have the likes of Reliance as well. So Reliance has sort of taken support around its 100-day exponential moving average. On an immediate basis, 2,500 is very much possible, but it's a very tricky stock to play with. But if it does give an elongated bounce back, which means 2,600 odd, that would easily translate into more upside for the Nifty as well. So broadly, 35% of BFSI, 10% of IT, I think 7-8% from the metal space, and the remaining from the PSE. These are the four areas which is like 70% of the market broadly, which should provide the necessary impetus, the necessary push for the Nifty index. I reserve the right to go wrong, but as per the data, as per the current technical setup of the market, we feel that there is a good possibility of the views that we've shared seems to be, there's a good possibility that the views do play out as expected.
Right. So with that caveat, one last question is, what is that stop loss that you would advise to maintain in case we do not see this up move?
Yeah, that's the good thing about trading. There is always a stop loss. So I would, stick my neck out and say 19 to 30 on a closing basis should be the stop loss for long positions, because this was, the final futile attempt, in a way to break the floor for Nifty, which was not possible eventually. So 19 to 30 will be my stop loss as per the spot on the closing basis for long positions.
Right, so that's going to be interesting. So that's Rahul Sharma of Stay Long, Stay Bullish so far, and just maintain a stop loss of 19,230. But otherwise, a 1,000 points rally from Friday's close is something that could be on the cards as well. Thank you, Rahul, so much for joining us on the show and
Thank you
giving
so
us
much.
that impetus in terms of what could be on the cards in September. A 1,000 points rally, which could be led by sectors like IT, PSUs, metals, chemicals. The stocks which he's mentioned are also pretty interesting, from an HDFC Bank to a contribution that could come in from a TCS as well as Infosys, some part from the metal pack as well. PSU banks like an SBI could be one of the contributors as well to the 1,000 point rally. Interesting perspective that we're picking up. Let's see what holds in terms of the month that is expected to come in so far. That's all that we have in this session. Thanks for watching, and lots more lined up on the other side. Please stay tuned to BQ Prime.